The enthusiasm we saw late last year with the rising stock markets reversed this year amidst policy uncertainty. Stocks have fallen globally, particularly here in the US. So there's certainly a lot of concerns reflected in equity markets today.
We'll see what happens with the economic restructuring that's being done through the tariffs, whether it brings more manufacturing back to the country. But we really do think that in the long run, this is set up to be a very, very good long-term equity investing environment.
Tariffs and policy uncertainty weigh on pretty much all companies. It's not great for revenues and costs, but certain industries are going to be harder hit.
Individual stocks and individual sectors that are secular growth oriented are really probably where investors should focus right now. So thematically, we're very excited about a number of things. We are excited about healthcare. Another really interesting theme is applied AI.
Healthcare stocks actually slipped in the wake of last year's election, but we see great opportunities there. So obviously, everybody's heard of Ozempic from Novo Nordisk or Mounjaro from Eli Lilly. They've been growing like wildfire, but the reality is we see opportunities beyond just those companies. People are really looking for not just weight loss, but more convenience or a better safety profile with less side effects. And we see opportunities for both. Roche recently did a deal with Zealand to develop a drug that has similar weight loss characteristics, but far fewer side effects. So that's obviously far more convenient if I could take a drug once a day instead of injecting myself. So whether it's a drug with fewer side effects or a once daily oral GLP-1, we expect those drugs to take share in the decade to come and drive stock performance.
Another area we really like is applied AI. Applied AI is really interesting because it improves overall products and services of companies. So defense is obviously an incredibly important area. So Kratos is a company that is a $4.5 billion market cap company. Like companies like Anduril and Palantir, they operate along with prime contractors, the historic prime contractors like Northrop Grumman and Lockheed, but they're bringing new technology to the table. So Kratos has incredible programs in components for hypersonics, which are missiles and test beds, as well as unmanned drones. We believe that this company can grow its cash flow from about $100 million in EBITDA, so adjusted cash flow, to $450 million. So they're growing more than 4.5 times over the course of our horizon. And that it's trading at a 10 multiple or less on our out-year earnings. So this should, again, also be a double.
So the trends around AI, supported by the government as well as excitement from companies and investments, has led to its tremendous performance amongst a number of stocks, particularly the Magnificent Seven. But this year, DeepSeek provided a shot across the bow, actually, and a lot of those stocks have fallen. I think it also highlights opportunities looking beyond just the Magnificent Seven. So if we look to a company like TSMC, they actually make all of NVIDIA's chips. A lot of people worry about perhaps China invading Taiwan or how the tariffs will impact them. TSMC is actually in a very strong position and is behaving, taking advantage of that position to act very smartly amidst this uncertainty, both reinforcing investments in Taiwan, but also committing to invest $100 billion in the US, making 6 factories here. So they're actually sort of providing insurance policies as well as future growth through those investments. Another trend is cybersecurity. Obviously, the more our life goes online, the more we need to protect it and secure data. A company, CyberArk, we think is a tremendous business. They do identity protection. And last year, for example, they grew revenues by over 41%.
CyberArk is a company that protects identities. And they protect the most important identities, those of network administrators, and these can be human or machine identities. This company is about a $16 billion market cap company, and it has about $1.5 billion of annual recurring revenue in a market that's probably a $50 to $80 billion opportunity for them. The company is doing about $200 million in cash flow. This is free cash flow, real cash. And that is growing, we believe, to $1 billion by 2030. So you're gonna have a 5-fold increase in free cash flow, which is about a 35% growth rate annualized. Well, the risk for investors in this market environment is really uncertainty as to how tariff policy is ultimately going to play out. Will it cause inflation in the economy? Will it disrupt our relations with our trading partners? Nobody really knows right now until the policy is a little more firm. And investors will need a little more meat on the bone in terms of detail surrounding tariffs in particular before the markets really stabilize. Now, we're long-term investors and we really believe that they will stabilize and we're going to be better for it, but the next short-term period might be a little more tumultuous.